The exact opposite. It seems like they want to do a lot more than some are willing to accept. If you look at the minutes, nobody projects a rate cut for this year. As I mentioned earlier, not in the minutes, but who cares? It's Kashkari, who's a known dove, suggesting that you go 5.4 on the terminal rate and then keep it there for a while. They're unnerved by the strength and the tightness in the labor market. All of that portends to more hikes rather than less, or finishing anytime soon, doesn't it?
Yeah, but I don't think that's the thing that's bothering the market. I think it's for how long will conditions remain this tight. And, unfortunately, everybody wants 2019 back. So I will stipulate 2020 was a funhouse mirror. 2021 took it up a notch. And I don't think anyone is looking for a return to that level of accommodation. But everybody wants 2019 back, and they're not going to get it back. And there are structural reasons why. The people that have retired in the last couple of years are not returning to the labor force. That participation rate, it's just not budging. And the bargaining power that labor in the services economy has, it's not changing anytime soon. And so this idea that, like, we're going to go back to business as usual and we're going to have, 2% interest rates and inflation at 1% and the Fed struggling to get inflation going, that's a fairy tale land from long ago, and it's far away, and that's not what we're returning to. We're in a new paradigm. Everyone has got to accept it. A lot of people already have, but a lot of people have not. And I think the debate is going to be, when we talk about the cumulative effect of rate hikes, the debate is going to be how long will it take for us to have felt the full brunt of all of these hikes. And it's going to be a while. It happens quickly in the mortgage market, but it doesn't happen on the ground.
Right.
And the biggest problem is the trigger. Like, what would be the trigger for the Fed to not only pause, but start talking about the possibility of rate cuts? It's like millions of people losing their job. That's the trigger. 4.5% unemployment, maybe.
Which is exactly where I wanted to go with you next. This idea that the pivot is going to save the day. And I want your opinion. I want you to explain to our viewers, this idea of the pivot is somehow viewed as universally bullish. Well, to your point, the only way that they would pivot is if you have millions of job losses, if the economy goes into the tank, but they're only going to pivot if, in fact, it does that. And how is that automatically bullish for the stock market if the economy's gotten so bad that they have to even think about pivoting in the span of this calendar year?
So it's be careful what you wish for. Are you sure? Are you sure you're looking for rate cuts? Do you have any idea what those rate cuts would have to be accompanied by? Or do you have any idea what the trigger for those rate cuts might be? And I think that's why you're seeing this market-wide preference for stocks that do not necessarily need a Fed pivot. That's why you're seeing the value versus growth regime stay in force. But, one of the biggest issues for stock bulls this year, and it was a big issue in the second half of last year, is that you have enduring competition for dollars. And that competition is coming from short-term treasuries. And why would that change all of a sudden? It's not. Even like the 10-year has pulled back, it's at 3.69, and the 2-year is 4.5. And every dollar that an asset allocator like myself is going to put in play, that's a real hurdle, a hurdle the likes of which we haven't seen but for a fleeting moment in 2018 during the last rate hiking cycle. But think about this. Take a look at the percentage of S&P 500 stocks with a trailing dividend yield that's higher than the 10-year, 3.7, let's call it. It's the lowest level in 11 years. Only 15% of S&P 500 stocks have a dividend yield that is competitive with the 10-year. So if you want more than just dividends out of a stock and you want capital gains too, well, look at the economic environment that we're in. We know that we're going to be tight all year. So where is the growth coming from? It's a very difficult thing to do to bring yourself to say all of a sudden that's going to change.